Oh, Bitcoin, that's a hedge against inflation. Yeah, I don't see that working. I always analogize Bitcoin as it's a better version of gold. It's a digital version of gold, and I truly believe that. And all the gold maxis think it's a hedge to inflation. Yeah, not so much. If that were the case, gold wouldn't be wherever 17,000, 18,000, wherever it's at. It would be 30,000.
Welcome to Dream Richer. Do you think we are officially in a bear market? A bear market is a term used by Wall Street when an index like the S&P 500, the Dow Jones Industrial Average, or even an individual stock has fallen 20% or more from a recent high for a sustained period of time. For many investors, the bear market will become official if the S&P 500, Wall Street's main barometer of health, finishes the day at least 20% down from its peak. The Nasdaq is already in a bear market, down 31% from its peak. Dow Jones Industrial Average is more than 16% below its most recent peak. And of course, the main player, who everyone is watching closely right now, Bitcoin, is also down from its peak in 2021. The biggest enemy for all investors right now is interest rates, which are rising quickly as a result of the high inflation battering the economy. Last month, the Fed signaled additional rate increases of double the usual amount are likely in upcoming months. This could trigger a recession if rates are raised too high too quickly. By the end of this video, Mark Cuban unravels the mystery of a bear market and the best way to survive it. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
Look at the stock market. It's gotten tech stocks in particular, high growth tech stocks have gotten torched even worse than crypto. Right? Yep. I got tech stocks worth down a whole lot more than my Ethereum or my Bitcoin, or even my Polygon. Right? They've just gotten torched. Why is that? Because it went too high. When interest rates are basically negative and you can get as much capital as you need, or some people can get as much capital as they need to go out and buy stocks thinking they're going to go up. Why wouldn't they? You're borrowing at, let's say, 1%. And do you believe stocks will go up 1%? Sure. So yeah, it was $50 a year ago, but it's $300 today. So what? Everybody's doing it. It keeps on going up. Why would it go down? Well, you get to the point where it's just too damn high. Just because it's down 80 or 90% doesn't mean it's mispriced today. It may mean that it was mispriced last year. And with a lot of this, that's what it was. The money was so easy. It was so available that prices went too high. And it may well be that even though we're down, enormously, that we're in the right place in terms of pricing and we're finding the right place. And the problem isn't now, the problem was last year in the easy money. But the point being that crypto isn't impacted any more or less than anything else. And it's not going to change what people do any more or less, right? Now, I'll say that if interest rates keep on going up, and that's translated into savings accounts that, and all of a sudden you can get a 6-month CD for 4, 5, 6%, or something tax-free for 4, 5, 6%, that's going to impact people's decisions, because you go from, okay, I might be able to make some money in crypto last year and I can make my 10% on my USDC last year, right? And that seemed to be relatively safe, or I'm willing to take more risk, to, hey, I don't have to around and I can make 5% on this CD. That will impact the money that comes into crypto and stocks, for that matter. Then there's the Bitcoin maxi side of it. With the Bitcoin, Bitcoin, that's a hedge against inflation. Yeah, I don't see that working. I always analogize Bitcoin as it's a better version of gold. It's a digital version of gold, and I truly believe that. And all the gold maxis think it's a hedge to inflation. Yeah, not so much. If that were the case, gold wouldn't be wherever 17,000, 18,000, wherever it's at. It would be 30,000.
In the words of Mark Cuban, Bitcoin may be a good store of value, but in no way, shape, or form is it a good hedge against inflation. An inflation hedge is an asset that helps protect against the erosion of returns from a sustained increase in price pressures. Gold has traditionally been considered an inflation hedge, while Bitcoin has also started to be considered one by some investors and academics. Mr. Cuban, however, does not think that gold or Bitcoin help mitigate the impact of rising price pressures on a portfolio. And he said, calling either of them an inflation hedge is little more than a marketing gimmick. Mark Cuban has generally been bullish on crypto, particularly Ethereum, which he believes has the most upside in the crypto world as an investment, because it's the closest thing to a true currency.
I think the Bitcoin maxis got it dead wrong. And I think part of the challenge for Bitcoin is, even with the Lightning Network improving and becoming more popular, there's not enough utility. But that's the same problem gold has. Nobody needs gold jewelry. People like gold jewelry and want it, but they don't need it. And so there's a utility issue with Bitcoin. But that said, like gold, it's a good store of value. It's a better store of value when you're trying to be diverse in your portfolio. And that's why I own it, because I think I have no idea where it'll go. I have no idea how low it'll go. But I do know that once there are applications with smart contracts, not on Bitcoin, but across crypto, that regular people use and figure out, just like streaming was a better version of getting audio and video than traditional media was, when there's better reason to use crypto applications, that's when it takes off. It doesn't benefit you just because it's decentralized or it's crypto. It's got to be better because it's better.
One of the differences we've seen in this bear market, at least so far, is like, even though prices are down, the builders are still here. And I'm wondering if you saw that. Yeah, for now. Do you think that'll last, or do you think that? Yeah. How long do you think this bear market will last then? And so, is this going to be a long, dark winter?
No, it lasts until there's a catalyst, and that catalyst is going to be an application, or we get so low, people go, "F it, I'll buy some." It's like stocks, right? I look at stocks and I'll look at the market cap. I'm like, is Amazon? I own a bunch of Amazon, but should I buy more Amazon? It's $1 trillion market cap. That's not a price, right? There's some other companies where you look at it and they're like, it's a $250 market cap plus some debt now because they borrow cheap. I'm like, if this were coming public, if this were being pitched to me as a private company at this valuation on Shark Tank, would I invest in it? And if the answer is yes, I'll buy it, right? And if you think back, whether it's Bitcoin, Ethereum, Polygon, Matic, ICP, any of them, or even the new ones like Ape, and you look at the market caps and you see it's $1 billion plus market cap, or 6 billion or 8 billion or 40 billion, you don't look at that and go, that's cheap. Because if you remember back to, DeFi summer, these things were selling for less than a penny and their market caps were in the hundreds of millions. And then you look at some things like ALCX and you look at Uniswap, or SushiSwap rather, and even Uniswap, particularly SushiSwap, has got like a $250 million market cap. And then you look to say, why is that relatively cheap, right, compared to everything else? Well, because there's no utility there. You get paid it if you're an LP, but then what? Who's going to buy it from you? What's the reason to buy it from you? And so what happens is, it's not so much about the builders yet, but what happens is you'll see a consolidation. You'll see somebody whose market cap, if Cardano, everybody likes to pick on them, including me, but they could use what market cap they have or what cash they have and start making acquisitions. And then you take the builders and you start consolidating them, those developer communities and user communities, and they become a little stronger by doing that type of roll up. And who knows what's going to happen with Near Chain? Who knows what's going to happen with Polkadot? But they all have, high expectations.
It's clear from Mark Cuban's explanation that we are officially in a bear market right now. In his words, Bitcoin and crypto has taken a heavy beating, but nothing like what tech stocks have experienced. When the market starts to fall, some investors start to panic, but there are so many ways to take advantage of downward markets. For example, you could start short selling, trade currencies, go long on defensive stocks, trade options, or choose high-yielding dividend shares. Besides all these tips, one of the best ways to profit from a bear market is by simply buying the dip. In the words of Warren Buffett, be fearful when others are greedy, and be greedy when others are fearful. Do you agree with Mark Cuban? Let us know in comments below. To learn more about the latest crypto news, watch these videos here.